What is up, everyone? It is Dividend Grinder. Today, we'll be talking about the dividend capture strategy. So this is something I've never talked about before. I may have done it accidentally in a couple of my trades, but I've never actually intentionally done it. Let's talk about it. What is the dividend capture strategy? Is it something I recommend anyone else doing? Is it something that I might take up in the near future? Let's talk about it right now. So right now on the screen, all you're looking at is a basic dividend structure for a company, right? So you have the declaration date, and that's just the day that they announce the dividend. It'll be like, hey, we're paying a dividend on this date for this amount. The ex-dividend date is the date that you need to essentially own the stock by in order to get paid out for the dividend. So you need to hold it before the dividend, and then you need to hold it overnight until the day of the ex-dividend date. And on the ex-dividend date or anytime after, you can sell the stock and you will still get the dividend as long as you held the stock before and held it through that ex-dividend morning, the after hours of the day before. As long as you hold it through, you will receive the dividend. The record date is simply for the shareholders on record for the company will get paid out. So usually the record date is 1 to 3 days after the ex-dividend date, and it just assures, because there is a delay between when shares are purchased and when it goes on the company's books as record holders. So when you purchase on ex-dividend, that record date will have the company notice that, okay, they are on the company's books as a shareholder, they can get paid out the dividend. And then last and not least, the easiest one, the favorite one, the payable date is the day in which you will receive the amount that you are expected to receive of dividends per share on the day. So dividend swing capturing. So as I just said, in the middle of it, dividend swing capture, because it is a swing trading strategy. It is a dividend capture strategy, and it's all about swing trading. So what is the whole premise of swing trading with dividend capturing? So you analyze companies that pay out dividends. You see a dividend that you like. You buy it before the ex-dividend date. You hold it overnight. And as soon as that ex-dividend date hits, you sell with hopes that the price of the dividend is higher than the amount lost in share price on that ex-dividend day. So what ends up happening is that when you have the declaration date, the price of the stock is automatically adjusted to include the dividend amount. So say something was trading for 20 bucks, if the dividend amount declared is 50 cents, then technically the price of the stock should then be $20.50. Now sometimes that doesn't happen, sometimes it'll just stay at its $20, but when it goes ex-dividend, and that's why it's called ex-dividend, because then the price does not include the dividend, it's excluding the dividend. The price of the stock will be adjusted for the amount of the dividend on the ex-dividend date. So if it's trading for $20 and the ex-dividend date says there's going to be a 50-cent dividend, then the market makers in the morning will adjust for this, and the price of the stock the next day, theoretically in a perfect world, if there were no other adjustments, would be $19.50. It would get adjusted by the amount of the dividend that's going to be paid out. So there's the catch. It's not like you can just buy before the ex-dividend, capture it, and then sell it right away, and you'll still get the profit of the dividend. You don't have to worry about the price at all. The price of the stock gets adjusted for the price of the dividend. So there's a couple things that factor into dividend capture strategy, swing trading with this. So one of the things is you have to be willing to hold on to a stock if it doesn't recover its price for the amount of the dividend. So in our prior example, if something is $20, giving a dividend of 50 cents, let's say on the ex-dividend date, the price goes to $19. So it actually dropped $1 when you're only getting 50 cents a share in dividends. So the strategy would entail you to hold on to the stock until the price at least reaches $19.51. That way you have a profit. So the dividend paid 50 cents, you lost 49 cents on the actual market trade. You still make out profit, but you would have to be willing to hold on. And sometimes the price never recovers, and it could be you holding on to the stock forever, or you just cut your losses, sell it for a loss, and the whole thing is just a loss, but at least you got the dividend to somewhat compensate for the loss in market value. So one thing you have to consider is that this, even though it entails dividends, it is not a investing strategy. It is not investing. You are trading. You don't really care about the fundamentals of the company. You are trading. You're just trying to get the amount of the dividend in there, and you're trying to profit, or at least more than break even from the dividend price towards the share sold price on the transaction. You don't care about holding long term. This is not investing. This is trading. So even though it has to deal with dividends, it is not an investment strategy. It is more of a swing trading, a more try and get money in fast and quick kind of strategy that I personally do not recommend. Especially if you're a beginner, I do not recommend this at all. Some of the more advanced people who are better at technical analysis and they're better at analyzing charts, and they might have a little more capital to play with, dividend capturing becomes interesting. It's something that can work if you know how to do it properly, but it takes a lot of practice. And even though it's such an easy concept to do, you have to really master it. You have to keep track of everything, what your break-even points are, because it's not like the payable date is the day after ex-dividend. So it's not like you're getting that money the next day and you can kind of judge where you're at. You have to keep a mental note, or at least write it down, or some kind of physical presence known to what you paid, what the dividend is, and what is your break-even point. You have to know that for all purchases that you would do for this strategy. Let's just look at an example that would be successful. So this is Apple Hospitality REIT. If we zoom in a little bit here. So the ex-dividend date is March 4th. It was yesterday. And the payment date is going to be March 18th in the amount of 10 cents. So if we look at the chart, the dividend strategy would have you buy right about in this range. So from March 1st is Friday. It's a trading day on March 1st. So you would buy March 1st or anytime before that. And then you would sell on the ex-dividend day, or you sell anytime after to capture hopefully at least 10 cents or more in 10 cents or less. So let's make it really simple. So let's say you bought it right here, right on Friday, the day before, and you held it to Monday, the day of the ex-dividend. So $16.52. Let's say you bought it there, and then the price got adjusted for 10 cents for the ex-dividend, and it also decreased even more. So $16.52 would go to $16.42 automatically just because of the price of the dividend. And then it dropped another 4 cents just due to market fluctuations. So if you were to sell on the ex-dividend day for $16.38, you would lose money because you're getting the 10-cent dividend payment. However, the market value decreased by 14 cents a share. But if you held on to today, towards today, so you bought at $16.52 and today it's at $16.48, even though the share market value is down 4 cents a share, you got that 10-cent dividend, so it washes to a net gain of 6 cents a share. So the 10-cent dividend minus the 4-cent market loss, and you would make out a profit of 6 cents a share. So that's just how the dividend capture strategy works. Now, obviously, it can go completely south. You can buy right before ex-dividend and the price just never recovers, and you're forced to either hold long term for more dividends, or you're just forced to take your losses and cut it early. And you could use it to maybe write down some taxes for some future gains in that year. Keep in mind, though, things with this strategy is that everything you get is going to be a short-term gain, whether it's a dividend or whether it's market gains. You're going to get hammered with taxes on short-term gains. So you're going to get doubly as taxed if you sell for a market gain and you sell for the gain of the dividend. So obviously, short-term dividend, you're going to have to pay high on that. And then the market price increase, if you were to sell for a profit on just the market price alone, you're going to have to pay short-term, which is taxed at your ordinary tax rate. There's no long-term capital gains there. You don't get a 15%. You get taxed at your ordinary income. So the dividend capture strategy, it's something that I don't plan on doing. Maybe if down the line, if I get bored, it's something you really have to keep track of. You're more of an active trader in this situation. You are not an investor. I would not recommend this to any beginners out there. But, I've seen people do it, and it's very fun to watch, if I'm being honest. It's like, you hold the stock. You can hold it for technically less than a day and still get paid out the dividends. It's very interesting how it works. It's like you don't, even though dividends are meant to incentivize long-term holding of that stock, you don't really need to do it. You can hold it for just a day and get the dividend payout and then just sell it the next day and nothing happens. It's not like, you get punished for it or anything. You just get punished in taxes and short-term capital gains. So this has been the Dividend Grinder. Hope you enjoyed this video on dividend capture. I've been meaning to talk about it for a while, but it's just something that, I don't personally do, so I never thought to really, make a video of it. But here it is today. Hope you enjoyed it. Leave your thoughts and comments down below. Let me know if you've done it in the past, and I will see you guys and gals in the next video.